Everybody, good morning, good afternoon. Give me 1 minute. Just getting things going here. We have some news coming out right this second. Let me digest it. That was important news, but we know that we have coming up this afternoon is the Federal Reserve's interest rate announcement. So I'm not sure that I expect anything too substantial to happen during the course of today. Right now, I am taking a look at the yen pairs right this second. So hang on 1 second. Let me share my screen, and then I will be back with you guys in a minute. So hang on. Oops, just switch this. Okay. These are the yen pairs, folks, that I watch in general. I switched to them this morning. I'm going to go back to to my normal screen, but I also like to get an idea on what's going on with the yens because there was ever since the end of last week when interest rates announcement in Japan, and there were a lot of people thinking they were going to be a pivot. Uh, and actually, there wasn't, or at least in the short term, there wasn't. Uh, Created some kind of funky moves in the yen pairs, which maybe now are looking to kind of rebound a little bit. So I got my eye on these yen pairs right this second. But bear with me a second. Let's see what's going on here in the news. Also, just to let you know, well, hold on. Let's take a look at the news first. What do we have? Key news was the non-manufacturing PMI kind of came in 51.8, expected 51.9. Little hot, not a big deal. What do you see? Non-manufacturing prices came in a little lower. Generally, the numbers are looks like a little bit weak. All of the numbers came in a little bit weaker, with the exception of the non-manufacturing PMI for April, which came in at slightly higher, 51.8, expected 51.9. Everything else, all the other numbers came in slightly lower. ISM non-manufacturing new orders, non-manufacturing employment number. The employment number came in a little low. Okay, that's important. All right, so let's get those numbers out of the way and take a look at the charts. Um, all right, I'm keeping an eye on the ends. I'm going to come back to the ends. If you remember on now I wasn't here yesterday. Jay was here yesterday. Um, I know we had a very good euro trade for you guys. A nice textbook, amazing trader, euro trade long yesterday. When I left you on Monday, I left you being hang on. I left you guys being long on gold. And you know I've had a very big bias on long on gold. So hang on, file. Russian into at the second this morning. Okay, this is my normal setup. And as you can see, okay, it looks like some weaker dollar. Okay, obviously weak dollar off of that PMI news, which is not surprising. Here's the dollar index dropping to low today. Dollar yen almost at the low of the day. Let's see, euro pushing up towards the high. Sterling making another run at the high. What do we have down here? Okay, now this is silver. I'm going to get rid of silver, and I'm going to put the Russell 2000 up for right now. Hang on. See what the indexes are doing. I left you guys the other day long gold, and as you can see, I had a very nice trade and a nice result. Okay, because I was in this area over here from Monday, and then look what happened over here. And I sat in it. Okay, up, down, and then had a major move yesterday. I was in it off of the longer term charts just to show you we were building lines. Okay, we had consecutive slightly higher lows. Okay, going in here, and this is the 1 hour chart. So now this is today's action. This is yesterday's action. This is Monday's action. So yeah, I mean, I had gotten in actually over here, was doing great, held on, came back down, but I had my stops in below here the whole time. Okay. And when you look at the action, you just look at the action it gave you. Sometimes you just gotta play the action it gives you. Look, just look. Okay, look, this consolidation that this is in right here. Okay, look at this piece, just it a number of times from 2007, okay, down to about 1980. All right, and we've been in this range, in this range, in this range. So on Monday down here, all right, it's kind of an easy trade. Okay, kind of an easy trade. Put your stop below over here, week, and I hit a big write up. Unfortunately, unfortunately, I mean I got out. I don't sit for the whole thing. This is a major move up here, but I actually did great. I made 0.5% on the account, as you can see here, which is fine for me. I am not greedy. Could have stayed in this strength, but when you have 0.5% of your account up, in a short period of time, and you're very comfortable with your trade, all right, I take my money off the table. Why? Because I didn't go short up here because this was such a strong and powerful move. And as I've mentioned to you guys before plenty of times, I am very bullish on gold. I'm just looking for better entries, strategic areas to enter. So I was not looking to go short, no chance. But at the same time, if you look at this range, okay, now we extend it into a new range. Okay, so now we have to take advantage of that move and see what we have. Okay, so the 4 hour chart, and as you can see again on the 4 hour chart, now we came up to highs, okay, which we're having a tough time right up here. So I'm not looking to initiate a new long position right this second. I am still very, very bullish on gold, but I am looking for better areas to get in. I'd rather buy it on a retracement. I got this very big move up here, made my money. You can't keep pushing it. You just can't keep pushing it right this second. Now, maybe after the non-farm, after Fed announcement this afternoon, maybe that opens up gold again. But you got to be real careful up in this area as a strong area to actually to have resistance, very key resistance. So I am now flat on gold. Had a great day yesterday. Haven't really done any trading today. I picked a little bit on the euro yen, but very, very little. And so let's see what else is going on. So this is the longer term chart on gold. I'm very, very bullish, as I mentioned. I can't go short. Probably, not a bad idea. It's not a horrible short, but this is just too powerful of a move for me to go against it. This is the week's high. Okay, remember now we're looking at a 4 hour chart. So this is the week's high, which obviously was set yesterday, and we haven't been able to kind of take that out over since that big move up yesterday. I don't know if I anticipate that breaking, until after one way or the other, until after the interest rate announcement this afternoon. So that's kind of what's going on with gold. And so I am going to leave gold alone for right this second. Okay. Let's see. Uh, what's going on? What's going on? Euros were back up to 110.50. I'm not a buyer over here, that's for sure. Dollar's still weak. Dollar yen a little bit weak. Can't chase it though. Okay, if you're gonna go short dollars, all right, you really need it. You need an entry point. Okay, that's the issue. We have a very big bias right now. Dollar probably weaker. Talking about what's going on today, I don't expect any major surprises this afternoon. I think the market probably has it dead right, and that's we'll probably get the 25 basis point Fed hike that the market is highly anticipating. The question is going to come in the policy statement and in the question and answer after as to whether or not we're going to be pausing right now. I think the most likely scenario is that the Fed indicates a pause, that they're going to raise 25 basis points today, as has been their schedule, as has been what they have been committing to. And there's no reason to think that they're going to go back right this second on what their conversations have been and kind of what kind of guidance they've been giving. And so, pretty much people have been looking for a one more hike today and then a pause to see how this 500 and so basis point rate hikes that have been passed through the market in the past year, how much they've really taken hold. We also have the banking crisis. People want to call it a crisis or not call it a crisis. To me, there's a lot of problems still to come in the banking industry. It doesn't mean that the government is not trying to step in here to support wherever they can, but I think that there's a lot more problems to come in the banking industry down the road. So I am very bearish, as you guys know, and as I've been talking about, I am very bearish on the markets in general. And I'm very bullish on metals, gold in particular, but silver, silver also, but silver's got a bigger spread. So if you're going to get into a position on silver for a longer term position, I mean longer, if you're going to hold it even just for a few days, then I don't mind paying the spread. But if I'm going to be doing shorter trades, 10, 15-minute entries, looking to be in a trade maybe for a half hour or an hour, then I try and stay away from the areas where the spread is a little bit wide. It's tougher to make your money. Risk reward gets a little bit skewed if you lay between commission, if you're trading FX or spread and commission. Well, okay, here we go. I'm not chasing anything, guys. Dollar week. Euro taking off, dollar week. I'm not chasing anything. The indexes look like they set highs and they're coming down. I think things are going to be just choppy, to be honest with you. So I'm not going to chase any move right this second. Right? Nothing. If I find a good entry, then that's fine. I will do a trade today for you guys. That's going to be fine too. I'm sitting on my hands right this second. Market is just very, very choppy. And it's going to be hard to figure out exactly what's going on between now and today. So I may reduce my leverage a little bit, but let's see if we can maybe find something in the next, half hour or so that gives us kind of an entry, potential entry, but everything is kind of exaggerated right this second. And if you just look, you look at the chart. Okay, just set it. As you try and chase a new high on the euro, now's the time to do it. We had let's see, 110.50. It's a tough number. 110.5. I'm not chasing short dollar positions here. Now maybe, dollar yen, if you're looking to be short dollar yen, to me is the best setup. And so let's just take a look wide. New line here, but you'd have, your stop's gonna have to go in here. I'm waiting. I, I just can't chase. You want to be short. You don't want to be picking the bottom here. Okay? At least if I can keep you guys out of picking bottoms or trying to pick bottoms or trying to pick tops of the market. If that's the least that I can do for you today, then that'll be a lesson well served. All right. There's just no reason looking at dollar yen that you're gonna want to even consider going long. Okay. Why is that? Well, let's just take a look. All right. So here's the 4 hour chart. So look at the weakness. Okay, since the high early in the week, we've been nothing but straight down on dollar yen in the 4 hour chart. You want to try and pick a bottom here? I'm not going to try and pick a bottom right this second. Let's look at the 1 hour. Is the 1 hour even trying to form something? Is there any room? Look, we took out a very key red line. All right. This was not we talk about the high low before the high. I mean, we had lines here, we had lines here, we have a line here. We were just taking out these lines, pushing down on the blue lines. So you're not looking, you want to, if you want to go short dollar yen, that's fine. You got to look for an entry, but right now you don't want to jump on, and you are certainly not trying to pick a bottom. Okay, then go the other way. Let's just take a look. Okay, 30-minute chart. Once again, we have a spike up here, which was kind of an area. So you'd have to figure that you'd have to put your stop up here somewhere if you're going to put a trade on. All right, at this point, all right, this is clearly a key area. So really, your stop would be above here. Just don't want to put on anything. Let's look at a 15-minute. I just don't trust anything here. I'm not picking bottoms. Okay. I'm not picking bottoms and I'm not chasing. So that's, you have to know that there are times that are good to trade and that there are times that are tough to trade. And, right this second, I expect very choppy markets. But yet, a choppy market, you sell kind of, you sell rips higher and you buy dips lower. So let's just see. Anybody have any questions? All right, because it's such a tough trading market right this second. I could talk to your theory, about what's going on. Sometimes it just aren't trades to do. This is interesting. Let's look at, sterling. Okay. Let's take a look at sterling. Sterling. When you look at the day, we have a nice little trend line developing. Pushing up, pushing up, pushing up. We did take out last month's high. Okay. And now we're still pushing again. Theory is that UK inflation is still very high. They're going to have to keep their interest rates higher, or maybe even continue to raise their rates. Once again, we're talking about in the US, the thinking is, and this may change, the thinking is that we're going to be one and done today. Okay, we're going to pause after a 25 basis point hike today. So if that being the case, then the dollar should weaken. All right, we're all expecting some dollars to weaken, and sterling should continue to move up. But do you want to put that trade on right this second? No. And and you're certainly not putting on a trade now that you want to hold through an interest rate announcement. Okay, because that's just gambling. Because anything can happen today. All right. I would put my money, which I have, okay, on a 25 basis point interest rate. Okay. But their future statement, as far as what they're going to be doing going forward, whether this is they're going to actually talk about a pause specifically, or they're going to make it, there's a big difference here. There's a subtlety, or they're going to go data dependent, right? Okay. There's a big difference between the two. Because data dependent means that we're obviously going to monitor very, very closely inflation and the markets and the banking industry and the economy, and they're going to make their decisions on a meeting by meeting basis based on data versus actually declaring a pause. Okay, there's a big difference here. Data dependent means they very possibly can raise interest rates at the next meeting. They could possibly lower them at the next meeting. All right. A pause, it'd be interesting to see, important to hear what they say. A pause is okay, we're stopping here, and now we're going to let things settle, and we're going to see how the market and and the economy and inflation kind of lays out. But we're not doing anything for the foreseeable future, and that's kind of been their kind of their talking points, for a while. The bond market yields once again are down today. Um, the bond market is taking the position, and the bond market's usually right, but the bond market's taking the position that the Fed's going to cut rates this year. So that's the, or at least when I say the bond market, okay, the action in the bond market. All right, with having a 2-year yield at 387 and a 10-year at 338. All right, when Fed's funds rates are going to be in the low fives after today. So what does that tell you? When the Fed fund rate is in the fives, but the yields on the 2-year are 3.87. Okay. So what that's telling you is that they expect interest rate cuts. And the Fed has been really going out of their way and being very, very clear that even if they pause rate hikes, we anticipate those rates to stay higher for longer. So there's a disconnect, the big disconnect going on in the market right now. And the bond market is usually right, but I got to tell you, the Fed, as wrong as they've been and as poorly as they've handled things, I don't see them going back on their rhetoric, because if they go back now on their rhetoric, that is just a bad sign in general. First of all, you lose faith and trust in the Fed as to what they have been saying all along. Now you have to start questioning, really questioning, instead of interpreting. Now you got to question if they're telling you, really the truth. So, I think the Fed has kind of locked themselves into, like I said, one rate hike today, and then a pause, and then staying there higher, longer. But the reason the bond market is kind of indicating a rate cut is because the bond market, I think, is anticipating a very significant recession coming into play and deteriorating business conditions. And that's why they figure the Fed is going to end up cutting rates to stimulate the economy. So it's not a good sign that rates are lower right now. Yields are lower. That is not a good sign for the economy to be coming. Okay, if that makes sense. When the Fed funds rate is in the low fives, and your 2-year note is at 387 right now. All right, that's forecasting a rate cut by the bond market, not by the Fed. Big difference. So, because the bond market is generally right, many times, not 100%. When the bond market is generally right, then that, to me, that portends some real economic issues coming in later this year. Personal opinion, which is why I remain very bearish on equities and very bullish on metals. And I don't anticipate that stance changing anytime soon, and not with the economic numbers that I see in the marketplace. So looking at sterling, it's interesting. And we may have the high put in, made a second attempt to taking out the high. We couldn't. I don't know if that's going to be enough. But again, everything's choppy. Russell 2000, we're having a rebound. This is the Russell 2000. This is the Russell 2000. And what you need to know about the Russell 2000 in particular, if you don't, is that this is where a lot of these mid and region and moderate-sized regional banks are situated relative to what indexes they're in. And so the Russell 2000 has been getting, kind of ugly. Okay, so we started to move down here a few weeks ago. I mean, if you look from, obviously we had the big move down, and then, believe it or not, this is just consolidation, right? Just tighten up your screen a little bit to see something, just so you can take a look. Okay, tighten up your screen, and you see when you see this is, consolidation. Okay, just recognize there's nothing going on. We look for nice moves like this. Now, Russell 2000, this is a 4-hour chart. We could be putting in, we have an unconfirmed new blue line over here, which should be good. Your key line, just so you know, if you're going to go short, all right, let's look at this. If you're going to go short, this is how you play in any trade or any bet. You got to identify a key line as to where you're wrong. So just looking at the Russell 2000, we have a move down heading right now. Okay, this is what we can look at. We came down, we retraced up to here. Now we had a big move down and then a big retracement, creating a new blue line. Okay, more importantly, from here, we set a new low. Okay, so we set a low, we retraced, we set a new low. Okay, this line right here is what we call, and this is really important, and you have to learn how to identify. It's the same on every trade, on every instrument, and on every time frame, is being able to identify the key line so that you know what side of the field you're on, where are you playing, okay? So what I mean by that is we have this line is the key high before the low. Okay, do we understand why that is? We came down, we set a low. Here's the next low, okay, right? Where is the high point between those lows? Right here. This is the high before the low. Why is it not this line? Okay, why is this preceding line, which it is, it's a preceding line, all right? And it's important, okay? I'm not, don't get me wrong. We use this line, okay? However, this is not the key most important line. The key most important line right now, what we are looking at, the field that we're playing in, is we're playing in the past high before the low and the low. So this is our playing field right now, if that makes sense, right? So we came a move down. This is where we set a new low. This line, okay, is not as important as this line because this was not a low over here, if that makes sense. Okay, we had to take out down here. So we have the low, the two lowest lows. Okay, what is the high point between them? Right here. That's the high before the low. So this line is your key line, okay, in a short move. So if you were going to go short, now once again, this is the 4-hour chart. I'm not doing this today. All right, things are really nothing really is going on right now. I wish I could tell you that there was. We just had to set up a trade. All right, what did we have here? We had to move down, move up, move down, set a new low. The new low came from this line. So what would you do if you're going to go short? Okay, you set up like we said. Okay, you move your stop loss above here. Okay, and now now you're patient. Okay, your goal is down here. All right, if you would enter right now, and again, there's just no reason to enter a 4-hour chart. Okay, no. Yeah. But this would be the setup. Okay, I'm not entering on a 4-hour chart today, so there really isn't much going on. 15-minute. As you can see, there's just really no activity. Maybe pound dollar. Maybe pound dollar short. I don't know. Nah, guys, you know what? I'm not doing any trading right this second. Gonna lay off until later this afternoon. So we're gonna cut the short today, and we will talk to you guys tomorrow. Just to let you know, I'm in the process of moving, so there's a good chance that I will not be doing a webinar tomorrow, Friday, or Monday. All right, but I will be back on Tuesday. I'm moving. I'm in the process of moving. I'll be very busy over the next few days. Final move is coming on Monday, is when everything gets finished up and settled in. And so I'll probably be back on Tuesday. Not probably, I'll definitely be back on Tuesday. So that's it. There's nothing going on today. There's no reason to try and trade. Okay. So have a good day, everybody. And I'm going to cut it short, and we will talk to you tomorrow morning.